Hey, what's up, guys? We are currently in uncertain situation in the economy where new cases of this illness continues to increase while workforce stagnate. In this video, the billionaire investor Howard Marks will explain what we should anticipate as investors in the next few years. The billionaire investor Howard Marks needs no introduction. I made few videos about him before, but those of you who are not familiar with Marks, he is a money manager and co-founder of Oak Tree Capital Management. They currently manage around $124 billion. Recently, Howard Marks expressed many concerns about our current economy and massive money printing. No one truly knows the impact of unprecedented stimulus measure enacted by Federal Reserve and the government to support financial markets that were negatively impacted by this recent illness few months ago. Marks indicated recently what role Federal Reserve should play in our economy, and this is what he said. Will the Fed spend trillions of dollars every year forever to support the market? Is this its role? It's not its role. Howard Marks has not been shy about expressing his fear that market may become too dependent on the US central bank, where we have seen how Federal Reserve ballooned its balance sheet from $4 trillion to $7 trillion. But now it seems like Fed destroyed $2 billion. They're trying to at least slightly reduce its balance sheet. The impact of this illness set in put unprecedented pressure on the Wall Street back in March. Even before this crisis, Marks has expressed concerns about the outlook for the long-term investors. He voiced worry about growing debt in the financial system and companies' exposure to rising interest rates. He predicted that the return for the investors for the next 5 years will stagnate. So much has changed since then, with the benchmark interest rates at the range of 0% and 0.25%, the trillions of liquidity slashing throughout the financial system because of the Fed, but it's not clear how it will end. Just a few days ago, Howard Marks had another interview, and let's see exactly what he thinks will happen in our economy and financial market for the next few years.
Maria Alicia, I'd like to make the distinction between this episode and a normal cycle, because we have the normal cycles where things go well and then they go too well, and then people anticipate a continuation, and instead they're disappointed, and then things go poorly, and then too badly, and then people anticipate permanent collapse, and of course then there's an opportunity for rebirth. This is a very different thing. This is a idiosyncratic, one-time, exogenous event, and so I don't think this is the entry for this experience has not been a typical cyclical downturn where there were excesses and then they had to be corrected. However, number one, I do think that the preceding cycle in the years 17, 18, 19 took us to a high point from which we were vulnerable to an exogenous influence such as we received. And number two, of course, I think that we will have what will feel like a cyclical recovery, but of unusual proportions. Similarities, but as you say, history does not repeat. There are, of course, reminders of the global financial crisis, except that was an experience that began inside the financial world, and this one comes from outside the financial world. That one came from foolhardy errors that financial institutions and lenders made. This one, it wasn't really the fault of errors made by financial market participants. It's very popular in the States nowadays to say that this is not the people's fault. They didn't make a mistake. They didn't cause the problem. And certainly that's true, but it was worsened by the fact that we were at a cyclically high level. So another similarity to the global financial crisis is that the Fed and the Treasury came to the rescue at that time. It took them some months to figure out what to do and get financial support, get legislative support from the Congress, but eventually it was successful. This time they used the playbook from the global financial crisis. They did everything in a matter of weeks, in a very large scale, and apparently with great success. So similarities. And then, of course, the other difference is that that was being a cyclical experience. It took a while to recover. And here, people are talking about, well, if we can just get the disease under control, we'll have a V. I don't necessarily agree, but that's what they're saying. I think that it's going to take a while. The vaccine will not be here as quickly as the optimists hope. I would say people started to talk about a vaccine in March, and the indication from the professionals was that it would take a year or a year and a half. So that means March to September of next year, and I think that's right. The optimists think that we'll have a vaccine in the second half of 2020, and my guess is that it will not be fully approved, and if anything, it will go to first line responders at that time, emergency cases, and not to the general public. And of course, it'll take a good while to create millions of doses of the vaccine and get it distributed throughout the country and throughout the world and administered. So I think that that's one thing. Then another thing is that I think that the return to work will be very gradual, since we will not have a vaccine for, let's say, 9 months from now. I think that people who have a choice economically will return slowly. People who have to go to work are probably being commanded to go to work now or next week or the week after, something like that. But the people that'll be the people who deal with the public or deal with a physical product. Those of us in the white collar world probably have the opportunity to work from home, and many will do so as long as possible. So I think it'll be gradual. I heard Hank Paulson, the former head of Goldman Sachs and the former Secretary of the Treasury, 2 weeks ago. He said he thinks that half the people who are out of work will return to work this year. He also thinks that a fair fraction of the jobs that have been lost permanently. And it's likely that a lot of small and medium-sized businesses, which were founded based with limited financial resources, will have trouble scraping together the capital to try again. So for all these reasons, I think that the recovery will be gradual. And my own guess is that GDP and S&P earnings, let me say first that I don't follow the stock market professionally and invest in it professionally, and I don't professionally make earnings projections. But my guess is that GDP and S&P earnings in 2021 will not necessarily be back to the 2019 level. And that may well take until 2022. So I think that people have been talking about a V-shaped recovery, and I like to think about a check mark.
Firstly, Howard Marks makes a distinction between normal cycle and this one time in a century black swan event. As he described, normal cycle is where things go well, then they go too well, people start getting euphoric and extrapolate the same momentum into the future, but once the market declines, things go poorly, then too badly, then people anticipate depression and permanent collapse. This is when the market creates an opportunity for rebirth. But this time Howard Marks believes it's different. Mainly because, like in 2008 housing bubble, where that crisis came from inside of the financial world, while this current crisis came from outside. So he's trying to say that it's not people's fault. Wall Street did not cause the problem like they did back in 2008. And I agreed, this is true. But we have to be real. Let's look at the facts and real numbers. Unemployment claims continue to increase. Just last week, another 1.3 million Americans filed for unemployment benefits. Over the past 4 months, more than 51 million Americans have filed for new unemployment claims. That's an unprecedented level. As of 2019, there were around 160 million people employed, and the unemployment level was at all-time low. 51 million people of 160 million, that's about 30%. Numbers do not look too good. Let's be realistic. Many people went back to work, but even larger number of people continues to lose jobs. As Howard Marks said, that around 50% of the people who lost the jobs lost them permanently. If you look at this chart, it indicates that about 20 million people lost their jobs forever. And if you look what is going on in the United States with the new daily cases, it looks like we're reaching a new all-time high every single day. Back in March, everything started to shut down and people were paranoid. But in July, it's much worse. And who knows what will happen by the end of 2020. GDP and earnings are projected to decline. I like this chart. Earnings of S&P 500 are stagnant and will continue to decline while the stock market continues to go up and up. In addition to that, Howard Marks mentioned that we will not reach 2019 numbers in earnings and even in economy anytime soon. He believes that most likely sometimes in 2022 we will be able to recover and reach 2019 earnings, which means probably for another 2 years from here, the economy will continue to stagnate until people will be able to go back to work safely. Let me know what do you guys think will happen to our economy in the next few years. Leave your thoughts in the comment section below, hit that like button and subscribe.